lot.
Shireen, thank you very much for that. That's an interesting discussion, and there is a lot going on in the markets as well. I mean, just sort of anticipating, and there are lots of moves, individual moves. How much will be validated, of course, is the question we'll have to wait and watch out for. That's a 0.25% higher for now, as far as the index is concerned. Keki Mistry is with us, former Vice Chair and CEO of HDFC. Mr. Mistry, it's always great to have you on an important day like the budget, as you've been with us in the past as well. So great to see you again. Just 20 minutes to go and we'll have the budget speech starting. Visuals are already coming in, the Finance Minister in the Parliament, and those are live visuals which are coming in as we speak. We'll stay with the visuals, but Mr. Mistry, let me ask you, top of mind, 2 or 3 things in terms of, I mean, there are lots of asks, but in terms of real expectations, what would those be?
I would say growth, focus on growth. Second is focus on job creation. Third is leave money in the hands of people for consumption, to improve consumption in the economy. And the fourth, if you ask me, would be some reforms for the capital market. Capital
market reforms. Well, capital gains tax, I doubt they'll touch, will they, Mr. Mistry?
I don't know. I think some kind of, if we could have some kind of consistency in the tax rules, it would help a lot.
Can you be a little more specific? What could be your ask?
I'm saying if we were to say that the capital gains, the maximum, the capital gains, long-term capital gains now is going to be 12.5%,
yeah.
And that is the way it's going to be for the next X number of years, rather than keep, shuffling and making changes.
That's possible because she's also promised an economic policy framework announcement. So it's possible that something long-term will be announced there. But Mr. Mistry, let me come back to your own love, housing. I don't know when with the new tax regime, whether specific incentives can be announced for higher interest, higher principal set-offs and stuff like that. But overall, can housing expect something?
I think housing should expect something because housing is a big employment generator.
Yes.
And we know that employment, creation of jobs is such an important facet of the budget. So there are certain policy decisions that could be taken. Like, for example, if there is a PME 2 scheme, we had a Prime Minister's Awas Yojana Scheme 1, which was extremely successful 5 or 6 years ago. Did very, very well. Now, if we were to have a PME 2, and that stretches to urban areas, then I think that would be a huge help to to the housing sector. Also, digitization of land records will help the rural economy. So there are many things like that can be done. Like take, for example, rental market. In India, we look only at people staying in the house, but in the Western world, a lot of people buy property with the idea of leasing it out, renting it out. Now, if you rent it out, the interest that you pay on the loan is capped at 2 lakh rupees, which, is not going to make too much of sense. So that limit needs to be removed. There are things like that can be done, which could be done for the housing sector without interest rates.
Got it. Just to tie in that point, you were about to say something on capital gains. Did you want to add something?
I wanted to talk about dividend. I mean, it's a long-drawn topic. We've talked about it multiple times. But if you really look at it, the dividend is getting taxed twice. The company is paying 25% tax on the dividend that it pays out because it's not getting a deduction on the dividend that they pay. And the individual is paying tax on dividend at the marginal tax rate. So if your tax rate, for example, is 30%, you're paying 30% tax plus 25% tax paid by the company. Now, plus, of course, the surcharge. So if we were to say that we tax dividend at the maximum marginal tax rate applicable to individuals, which currently is 30% plus surcharge, then the tax on dividend should really be curtailed to 5%. So then you're still taxing dividend at the maximum marginal tax rate.
Yeah. Okay, Mr. Mistry, on capital gains, I think because it is at 12.5, right? It's the thing. I think that is the number. It's the 10, 15, or maybe it'll go to 15. You're not expecting a reduction, right? I mean, you're saying just clarity. Just
clarity that it will remain like this. I don't think I expect a reduction.
No, last year, there were a lot of people who were saying 12.5 looks like such an unstable number. Will they make it 15? You don't have such fears, do you?
I don't. I really don't, because I think we've seen a lot of middle income and below middle income people now investing in equity markets. And if you want to, I mean, already we've seen some pressure on equity markets in recent times. So in my opinion, I don't think there will be any change.
In terms of, the CE, the economic The report yesterday, a survey, also kind of alluded to it, right? Taxes have been cut in 2018-19 from 35 to 25%, and the CE exhorting corporates to come in, participate, invest. Is there anything of that which kind of shows up in the budget in some way? I don't know how, but will that message be felt through the budget?
I think so. I think if we are to get growth into the system, but basically the idea is to create jobs. Now, how do you create jobs? You invest, you create more capacity, whether it is in infrastructure or in other industries. So some incentives for creating that extra capacity is something which I think is very, very much possible.
Okay. All right, Mr. Mistry, I hope they're listening. There's hardly any time, not much time for tweaks at least, but these, of course, especially the dividend point you're making, has been made, and let's see whether we have heard